We as investors invest in equity as an asset class for better returns than fixed deposits. And in the equity asset class, we may invest in shares, in equity mutual funds, and in portfolio management schemes. And the whole goal of investing in portfolio management schemes is to get better returns and alpha returns than equity mutual funds. And we as financial advisors also advise PMS schemes for the same reason. Now, Girik Capital is one PMS management company that ensures alpha returns over all other equity investments. Both Charandeep and Varun, whom we have known for over 10 years now, have indeed come out as alpha fund managers, and their PMS scheme has been the number one performing PMS fund in the country today. Let's hear what they have to say. Bulls versus COVID third wave. Who will prevail? Will the 52,000 levels of the market sustain?
These numbers are really irrelevant. Whether be it 52,000 or 32,000 or 82,000, it doesn't really matter. I think large part of the explanation will really come from data points that prove that the Indian earnings growth story is very much intact. And we will share with you data points on how Indian earnings, corporate earnings of the top 200 or 300 companies have grown in a significant and structural manner over the last decade. And there's no reason to suspect that will continue. I'll only like to say that I think, markets have been through several ups and downs over the last century. We've been through a lot, we've been through plagues, world wars, pandemics, you name it, demonetization, in the Indian context. And markets have always come back because markets are nothing but ultimately a discounted nature of the cash flows of the company that you're investing in.
The critical question that a lot of our investors are asking, or any investor would be asking today, is if I have a certain amount of money, firstly, should I book profits if I stay invested for a long time? And if I need to book profits, how much? Right. The second question is people who have money, aren't the markets too high for us to continue to add to these markets? So in this context, definitely, as I keep saying, this is not something that can be a one-size-fits-all. This conversation with you is only relevant to Girik investment style.
Should one be booking profits? I think that if one is a patient investor and has put away money, which is money that they can actually forget for long periods of time, they should not touch it, right? If one has a money requirement, one should be planned for it, and one should not be investing in equity markets in that case, because equity markets are a volatile beast. They're going to hurt you when it hurts the most at the time when you need the money the most. So one should not ever invest in money markets for short periods of time and should only invest disposable income in markets. Or are we taking a cash call? And the answer is a resounding no. Right? I'll tell you off the bat that what we are interested in doing at all times is finding the best avenues for deploying that money as per our screeners and our systems, right? And it's very simple. What we do in our screeners and systems is we look for potential companies that could become much, much bigger, where the earnings could grow exponentially over several years to come. Because that is where we have been rewarded the most in the last 10 years. And that is how we have made money for our investors.
Investing in concentrated portfolios like the Girik PMS is very different from investing in equity mutual funds. And this is very important for us as investors to understand whether we need to profit book at these current market levels. Let's also not forget that the PMS schemes also have their own inbuilt profit booking process. Though the PMS schemes as well as the equity mutual funds may fish from the same pond, their approaches and strategies to managing equity is very different. And this is so important for us to understand, especially during a time like this at such current market levels.
Now, remember, we are not good forecasters of macro in the next 10 years, that inflation's coming back. I've been hearing this inflation coming back argument for 10 years now, right? It's only gone down. I've only heard of interest rates are going to go up for the last 10 years. They've only gone down. I don't think there's anybody I know who can forecast macro. And the one guy who does get it right every 3 years is made a hero, right? but we conveniently ignore the 99 guys who just keep getting it wrong again and again. So making a living of forecasting company earnings and building a portfolio is far easier than trying to forecast macro and making a living. That's our opinion. And maybe some of the misconception they have is that there are tons of companies in India that have grown their profits more than 4x. And we've just pulled out some of these names. And this is another demonstration of when profits grow exponentially over a 5 to 10 year period, stock prices reward even more. So in most of these cases, the earnings have gone up maybe more than 4x and the market cap has gone up many more times than that. So wealth has been created in the last decade in some of these companies. Now, I would like to point out some of the companies on these slides where the earnings were minuscule and have gone up a lot. Now look at HDFC Bank, it was 3,000 crore then, 27,000 crore now. Had you focused on the macro, and the macro headlines at that time were starting to be, or at least in the next 2 years post March 2010, were about an unstable UPA government, were about the telecom scam, were about Europe going bankrupt, Greek bonds trading at 20%, the pigs economies. So there was so much macro talk which would have prevented investors from deploying money in good portfolios. So while people were worried and scared about macro, HDFC Bank's profit went up 9 times in the last 10 years. It's run rating now at close to 40,000 crore a year, right? So profit pool has grown. Of course, because we only invest in companies where we think the profits are going to grow.
Whenever I ask Charandeep, what about the macro environment? I usually get the reply, it's not our concern. It's all about picking the winners. Bad news is going to be all around us. But in this noise, what are the winners that I can pick? So it's about focusing about earnings and earnings growth potential. And this potential is picked with a great amount of processes and disciplines by Girik. And most important, weeding out the losers.
The idea for investors is to stay the course. A lot of people talk about Warren Buffett and how he picks stocks and how well he's done in terms of returns. But I think more than that, it's about staying the course, right? He stayed through probably about 14 odd recessions over the last, three-fourths of a century, and did not panic and stayed out there. I think that's important. Staying the course is very, very important to achieve long-term compounding. The point is, again, it's about staying the course. We always say that equity investing is for the evolved, because you will see pain, you will see misery. But the idea is to, again, stay the course. The second thing is, how do we deploy new money? And I think that's where Girik really differentiates, because the way we do it against or other compared to any of our peers or mutual funds, we do not just go out and buy the model portfolio. And I think that's what most of the people do. They would just take the money and put in all the money that comes into their existing portfolio. We have put in systems, and we discuss this in our weekly meetings, that what is the IRR on our existing companies from here, right? If we get new money, do we still have IRR on table on our existing companies? So for example, if we bought something at 100 rupees, maybe it's 200 today, and the IRR has dipped to the single digit, right? So we will not buy that for our new money that comes in the portfolio. So as we speak today, we are investing only 50% of the new money that comes in, and it could take anywhere between 1 month to 6 months for that money to get fully invested in our model portfolio. So the idea is to be slow. There's no reason to hurry and rush in and put that money. That's why we introduced this whole idea of SIP, because it's so amazing that the way money goes in slowly, and you're actually taking advantage of all the market fluctuations.
We can never time the market, and this is the plain truth. For you to be a winner in the equity markets, all it takes is for you to pick the right fund manager who follows processes and disciplines and best practices. It's about the time you spend in the market and not timing the market.